When you remove the layers, speed and simplicity happen. Ginni Rometty. My friends, speed and simplicity. 10 to 15 minutes a day, that is all we ask. Keep it simple and straightforward. And as Einstein says, you can't make it more simple than it can be. In other words, you will lose accuracy. You make it as simple as possible, but not simpler. I believe that's the quote from Einstein. That's what he was saying, though, is keep it simple, but it has to work. It has to function. If it doesn't function, it doesn't deliver, then you don't need it. Now, our weekly vertical crossovers time and time again do. And we see that reflected constantly on the charts. What do we see happening today? We see the S&P 500 up 1.43%, the NASDAQ down, up 0.5%. It's bonds that are down 1.67%. Gold is up quite nicely, 1.22%. And we look at Bitcoin. Bitcoin down over 10%. We keep telling you that we have that strong push on the weekly vertical crossover, which occurred, of course, all the way back on the week ending the 26th of March. It went up for 3 more weeks, but then inevitably, when you have a divergence, it crashed. So, what do we see going on with the S&P 500? We see a divergence, don't we? We saw where the market peaked back on the 11th, the week ending the 11th of June. And then over the last, well, going into the second week now, we see that downward pressure as reflected by the price percent oscillator and the derivative oscillator, which is accelerating down, pulling away from the red signal line on the price percent oscillator, derivative oscillator getting longer and stronger going down. Now, we've not reached the low of last week yet, but we do have a red down candle forming, already looking bigger than the prior week. Now, this is just 1 day into a 5-day candle. But again, we do see things trying to move down. Look at the 2-day. It bounced off, of course, the red signal line and has been pulling away. We saw the prior Wednesday, Thursday, red spinning top. This is a red down candle, Friday, Monday. So again, price percent oscillator pulling away. Derivative oscillator still positive. So we'll keep an eye on things. We can go ahead and retrack our trend line on the 2-day chart. That's not much of a trend line, but at least it's reflecting that down movement. We'll see as things move further. Look at the half day. You can, of course, see where things had moved down so strongly first on Wednesday and then on Thursday. And then, of course, popping up, I guess that was actually Wednesday afternoon. And then on Thursday, really down on Friday, and then popping up some on Monday. Now you see this is only reflecting when? It's only reflecting in the Monday chart. What happened on Friday? Well, that, of course, is where you saw so much of that strong down movement, popping up some on Monday, but not reflecting in that 2-day, nor in the weekly. Again, that we're not reaching a lower low, but first we're seeing as things move, we continue to see that devolution as far as our average pace goes. Remember, that's what these Heiken Ashi candlesticks are. That's why we like them. Even though charts up on Monday, we continue to see that push down. Now let's look at the Qs. What do we see there? They were up just 0.5%. Again, not reaching a higher high, but it does show you a green candle, even though, again, a divergence here. We had things much higher, actually back on that was the weekly candle ending the 30th, and then tracking on into the week ending the 7th. That was the 30th of April, the 7th of May. Then, of course, things shot down, trying to build back up. We reached a higher high, of course, last week, then that prior high in April. But what happened? Did we have the price percent oscillator higher? No. Now, it is trying to move up, still hasn't had enough energy to cross over. We do see the derivative oscillator is going positive this week, so we'll see how things go. We did have a 2-day crossover going up all the way back on the 7th of June. And of course, we see as things continue to track up as far as that nice trend line goes. Price percent oscillator losing a little bit of energy. Derivative oscillator still moving up. We look at that half day though. We can see where things were down on Friday afternoon, down on Monday morning, and then popping up Monday afternoon, but not enough energy. That price percent oscillator still heading down. Derivative oscillator still negative, losing a little bit of downward momentum at the end of the day. That's where we are on stocks. Again, up movement, but we still see things dragging quite hard on the S&P. And again, not enough energy to cross over yet. Maybe by the end of the week on the NASDAQ 100, or maybe that will fail also. We'll see. Now, of course, just that rebound in stocks. What happened in bonds? Bonds going the opposite direction, down 1.67%. We can still see, though, nonetheless, the derivative oscillator drawing some up movement. As it continues to increase. When we look at our Heikin-Ashi candlesticks, not hitting the high that, of course, was hit last week. Derivative oscillator losing some momentum. I'm sorry, that was the price percent oscillator losing some momentum. Go to the 2-day. What do we see there? Well, we see that 2-day reaching a much higher high during the course of the day, but of course it did close down. But the average pace on those Heikin-Ashi candlesticks still moving up. Derivative oscillator gaining momentum. Price percent oscillator heading up. We look at the half day, and that is where, of course, you see the weakness after everything that happened on Friday flying up, dropping off on Monday. Not enough to cross over going down, but did lose momentum on the derivative oscillator, price percent oscillator spiking down. We'll see what happens on Tuesday. But that is where we are. And of course, we noticed we didn't have a higher high on Monday, but we had a higher high. You can see where things spiked up on that price percent oscillator as things continued to move up on the 2-day. Of course, what is that 2-day reflecting? That's reflecting that bump up on Friday. Remember, the 2-day candle represented Friday and Monday. So that's where you can see that real spike showing itself. Now, let's move away from bonds, go to gold, up 1.22% for the day. But look at what's happening on that weekly. We see that devolution continuing in gold, price percent oscillator moving down, derivative oscillator moving down, not reaching a lower low because, of course, gold was up. We look at the 2-day, and again, you can see overall where things were down on Friday, spiking down, price percent oscillator heading down, derivative oscillator heading down. We look at the half day, and that is where you see gold bottoming out on Friday and then moving up some on Monday morning, Monday afternoon, price percent oscillator flat, derivative oscillator losing downward momentum. So again, we'll see how this week continues with the spike up on stocks and with, of course, the spike up on gold and the spike down on bonds. Lastly, we go to Bitcoin. What is Bitcoin up to? As I said, down over 10%, 10.27% for the day, not reaching a lower low on that weekly chart. Hit the most recent low back on the week ending the 11th of June. Price percent oscillator still losing some downward momentum. Gaining downward momentum. It's the derivative oscillator that's losing some downward momentum. Look at this 2-day chart. We can see where the price percent oscillator spiked over going down as the derivative oscillator has gained a little bit of momentum. Again, not hitting lower lows yet after 4 days of trying to move up. So again, we can see that Friday, Monday down movement reflected. And of course, this is where on the half-day chart, we can see where things had moved up through Monday of last week and then sort of devolving and accelerating as things have moved down over the last few days. So Bitcoin maybe still not found its level yet. We'll just have to watch, wait and see what happens to the cryptocurrency as it continues to move throughout its life. I mean, again, let's just track back a little bit at Bitcoin. Check it out. We can see where things spiked up there at the end of 2017, then down, into 2019, moving up, but not as high as 2017 there in halfway through 2019, then sort of devolving for a while, trying to pop back up again February 2020, sort of sliding sideways. And then, of course, when Bitcoin took off, weekly vertical crossover going up back in October of 2020, somewhere around that $12,000 mark up to our charts sort of ended there around the spike up at around the $57,000 mark. Went up for 3 more weeks up to 60, and then, of course, has been bowling down since then. So we'll continue to watch, see what happens to Bitcoin. So far, our charts have been quite good to us on Bitcoin. If you're interested in learning how to practice trade it, I encourage you to follow our charts with us daily. That's where we are, folks, as we end the first day of this latest trading week. God bless, all the best from the whole team at Charting Wealth World Headquarters.